Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. The gold price was on the move this week, rising from a low point of about $19.15 per ounce on Tuesday to a high of around $19.65 on Thursday. It was changing hands slightly lower, just below $19.60, when this video was recorded. I had the chance to speak with David Erfle of junior miner Junky, who said he sees support for gold trying to hold at the 1900 or 1920 level, although he wouldn't be surprised to see the yellow metal test 1850 since it was facing strong resistance there before breaking higher. David also spoke about what last week's interest rate increase from the US Federal Reserve means for gold and gold stocks. He pointed out that when the Fed begins a new hiking cycle, that typically results in a gold market bottom. In this case, David said, the central bank's plans were telegraphed far in advance, and gold stocks began to bottom about 6 months ago. He thinks they've now technically put in a bottom and have begun to show better strength relative to the precious metals price. When asked where he's focusing right now, David said he's been acquiring later stage junior gold developers that are at the feasibility stage or at or close to the financing phase. Many have experienced significant sell-offs, but he believes that looks set to change with financing becoming more accessible and market participants realizing that the assets held by these companies have good margins with a more elevated gold price. The one potential issue he sees with this strategy is if the stocks he's invested in end up being acquired too soon. Here's how David explained it.
But it's funny, my only worry about a lot of these companies that I've accumulated is I'm worried that they're taken over too soon. It happened to me recently when Orca Gold was taken over by Australian miner Perseus Mining. It was taken over for a large premium for myself and my subscribers that we were happy about, but it left a lot of that money on the table because of the project was so undervalued, and the stock was so undervalued. And we were hoping for the stock to be taken out a little further on down the road.
To finish up, I want to touch on oil and gas, which have moved into the spotlight due to the war between Russia and Ukraine. I heard from Rozencwajg of Goehring Rozencwajg, who said that although the conflict has pushed these commodities into focus, the world was heading toward a full-blown energy crisis long before it began. This is similar to what some market watchers have said about gold, which saw a price spike as fighting began, but has had other factors supporting it for quite some time. Speaking about how oil and gas investors may want to approach this situation, Adam said a de-escalation in Russia-Ukraine tensions could lead to a sell-off for companies in the space. He would consider that a buying opportunity and said he's looking at high-quality US and Canadian oil and gas stocks. He didn't share specific names, but did say that the holdings of Goehring Rozencwajg's fund can be viewed online. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.